Hey everyone, how's it going? Good to see you. Got a few seconds late start here. I apologize for that. Let me get my screen shared. Hey everyone, how's it going? And we can get started. All right. Okay, so today in the markets, a lot of people felt like it was going down, and there was a lot of comments, a lot of questions. Oh, are we in a bear market? How do I feel? Are we going into recession? And the answer is we got to step back and look at in context. Just because it looks like it's down on the day doesn't mean that we're bearish on the market. So all we did was pierce that EMA 20 and go below it, but then we closed right back above. So we are still very much in a bull market. The bull trend is intact. Hi Stacy, hi John, Lise, and James. Great to see you guys. So we are by no means in a bear market, and we're not even close. If anything, we are maybe in chop, maybe. But if all we do is bounce off of this EMA 20 and go higher, then no, this uptrend is intact. For now, I am cautiously optimistic that that is the case. Today, earlier this week or on Monday, I was talking about how there's no major catalysts in the news or in the scheduled for this week, except for really Jackson Hole speech. That's Jerome Powell's speech that he'll be giving on Friday, and that possibly is going to have a lot of maybe so the potential to become a major catalyst, or the potential to be a fat lot of nothing. Okay. So what is going to determine whether or not that speech is significant is what we call the Fed put. So right now in the markets, the reason why we've been able to go from these April lows basically straight up until where we are right now is because there are three puts operating in the market. By puts, I mean insurance policies. The first one is Donald Trump himself. He keeps announcing these tariffs, but every time the market has a bad reaction, he goes, oh, no, we're going to delay it 90 days. We're going to delay. Oh, no, it's not going to be 200%. It's going to be 15%. So the market now is comfortable that Trump is going to backstop it. So anytime there's just really bad news, Trump is going to say something to try to bolster up that market. So that's the first put. It's the Trump put. The second put is the Treasury put. So the market now, because of the Genius Act, because of a couple other things that they put in place, the market is now comfortable that the Treasury will come to the rescue if it looks like the market is going awry, if something like fundamentally is wrong with the markets or with the financial systems. Now they're comfortable that the Treasury is going to step in with maybe a repo window, maybe repo window is the Fed, with maybe like, for example, TARP back in 2008, where they rescued troubled assets, the Troubled Asset Rescue RP, I forget what RP stands for. So that they're going to come in and basically swoop in these troubled assets, and the market will end up being okay. And now what we're looking for now is the Fed put. So the market has basically priced in that we are going to get a rate cut in September. So if we end up not getting that rate cut, then we'll see a tumble downwards. But what we're looking for is indications on Friday that Powell says, hey, either it'd be terrible if he indicates that we're not going to get a rate cut in September. That would be really bad. But more importantly, if we go out to December, what we're seeing is that basically we're pricing in that there's going to be 3 rate cuts. Or by the end of the year, we're going to be at 350 to 375. That's what the market is expecting. If it comes out, if he gives the market any reason to believe that it's only going to be 1 or 2 rate cuts, then the market is going to fall. Obviously, if it's only going to be 1, then we're going to lose this 81% right here. And then if we feel like there's only going to be 2, then we're going to lose this 35%. So depending on what he indicates or what the market interprets at what he is indicating, then that will determine the magnitude of fallout, if at all. If everyone's, oh, fine, great, it sounds like we're still going to get 3 rate cuts, then the Fed put will be in place and the market can continue to kind of slowly grind higher. There will probably be a correction at some point or a pullbacks in between, just like we got right here. But for the most part, this has been pretty much linearly moving upwards. Right? And if we're going to continue doing that, then we need that third put. We need that Fed put to be in place. So that is going to be the major catalyst this week. So on Monday, I said we're just going to chop sideways, most likely, and coming down here and kissing this EMA 20 and bouncing off of it. That's really just chop sideways. It's not. We can't be too nitpicky. Okay, we can't be like, oh my God, Kane, we didn't trade in this tiny narrow box right here. Why won't this draw a box? Okay, we can't be so nitpicky. We can't squeeze the market into such a tiny range, right? So over here, this is reasonable. Well, actually down to what? This horizontal level, that's reasonable. That is what we would call chop. So actually a pullback to the MA50 would still be kind of chop. Why? Because at any point in time, I could pick any of these and say, oh, are we near that price level? And the answer is yes. So that would be a chop sideways. What I mean is that we're probably not going to get above the high over here. We're probably not going to get below the M850, but realistically, we're probably not even going to get below right here. This tiny little horizontal. So that low of today came kind of close, but we're still in the box. Or even if I said, okay, the bottom of today's low, we're probably not get to break that tomorrow, is basically what we're saying. Because Friday is the Jackson Hole speech, so that everything else is out the window. So are we going to break today's low tomorrow? Most likely not. So chop sideways is the order. So yesterday we talked about how VIX and the VIX expiration was coming into play. That explained a lot of this bearishness and then the recovery after the bearishness, because we did not get a whole bunch of rolling into significantly higher strikes. Let me see if I can pull up a VIX. Let's see if I'm getting good data right now. Okay, that's sort of. So if we look over here, okay, so we do have a little bit of exposure up here. We have 16 right here, 19, 20. This is just the closest. This is volatile because of Jackson Hole. This is out to, let me see what date this is out to. I think Tuesday or Wednesday. This is the 27th, right? Should be the exact same picture. Or it's not going to load at all. Okay. All right. So anyway, that's short term, right? So this includes the Jackson Hole volatility. After we get rid of the Jackson Hole volatility, then these should either diminish or the strike should get converge, or people will roll because he says something, and people will roll or add on to different strikes. So for now, I'm not quite. Basically, what happened was all that expiration at 16, it did not disappear. It just went back into 16 and then some into 19, 20, 17, 18 a little bit, and a little in 19, 20. So we didn't get a huge amount of change at higher strikes. And so we were able to recover. And so if we look at VIX, where did it go today? Look at the high of today was 17.19. That's pretty good. That's what we were talking about yesterday, right? It was 17. So we hit it, we came back. So that's that little VIX spike right there. Could it spike again? Yeah, of course, it could spike again. So just like this one looks pretty much like this one. And then the next day went up and then went up. It could happen. So tomorrow, if the market gets jittery and maybe some insiders get some inkling of what Powell is going to say, and then he says it on Friday, we could very much look exactly like this in the next 2 days. But I'm not really expecting that, and there's no trade there. There's no way we can trade there unless we said, hey, look at this. Our VIX is so low, and we pulled back, and we're still in the same volatility regime. Let's do a longer term VIX call right here and capture maybe over the next month or 2 or 3 months, we can expect to return to 20 at some point. I actually do have a VIX call that I put on yesterday at the end of the day, 1 month out. So that is up. Where is this? Oh, not that much, maybe like 5%. Why can't I see anything? Oh, I guess in the last part of the day, it widened out, and so we're basically flat. Didn't make any money on that so far. But taking a longer term view, is there a chance that we'll float up? Yeah. Is there a chance that we could get near here? Yeah. Look how many times we visited, just say that like the 17.5 area, 1, 2, 3, 4, 5 days here. And we visited over here, over here, over here. So a VIX call, a longer term VIX call is not a bad idea. All right. But again, you might wait until tomorrow or sorry, until Monday after the Jackson Hole speech, after we get all of that crazy volatility out of the way. And if volatility is still down near 15, 16, then we could initiate a call on VIX at that point in time. That would actually be a little bit better because you pay less because you avoid the volatility of Jackson Hole, assuming that it remains at 15 or 16 on Monday. Let's say hello to some more people. Hey, Tim. Would you please go over Repo Facility that I referenced earlier? What do you want to know about it, Stacy? No. Hey, Peter. Hi, Cosmic Spiral. Hi, Nestor. John. Your live trade from yesterday should have worked out. WRB. Let's take a look at that. I didn't get into position, right? So my order didn't get filled because I was looking for a pullback, and it didn't. It just kind of baby gapped up and ran. So our analysis was great. But if I was watching that intraday, well, which I was, but I didn't want to quote unquote cheat and say, okay, let me just go in on it. That would have been an excellent trade. But I wanted to, since we weren't able to talk to each other or trade anything live, I didn't want to say, oh, look, I changed my order and I got in and I made a whole bunch of money and you guys didn't. Okay, I didn't want to do that. So I just left my order as is and it never came back. But the other one we were considering, CSX, right, that did pull back to the EMA 8. And so an order right there would have filled, and then we'll see in the coming days if it pops back up. So that was a different sector. So we were playing two sectors, but we were also looking at travelers. We were also looking at Allstate, right? So if you look at TRV kept on going. Look at that. Very similar to WRB, and then Allstate, same thing. Okay, so we did really well yesterday, and we did that by following our procedure, by looking at the overall state of the market, by looking at strong performing sectors, by looking where momentum or money was going in, which sectors were going in, and then looking for the stronger ones inside of that sector and following that setup. We got confirmation from both Maverick and from Gamma levels, and that's how we ended up with those trades. So those did really well. Today I wanted to show you, because the tool is working again a little bit faster. We still are doing tweaks to make it even faster. And said I was worried about Repo. What worries me about Repo? Oh, are you referencing my Telegram channel? So let me see if I can find Fred. Oh, there we go. Here we go. That's taking a really long time. Wow. I don't know if that's going to load up. Okay. So basically, if you look at this, what you should see is basically a really flat line, very close to zero. And then every once in a while, you'll see a spike upwards. And if you see a long, prolonged spike upwards, then we're in really big trouble. If there's a minor spike or it only lasts for 1 or 2 days, then that's a sign of, oh, let's be cautious. Let's watch this very carefully. And then we'll see, because it could signal trouble down the road. And we did see one of those. I think it was at the end of July. Sometime in July, we saw one of those. So if we then go and see another spike soon after, it's only been a month maybe after that spike, if we start to see more spikes, then that is a sign of a distressed market. The only time this overnight repo agreement opens up at the Fed or at the Treasury is when the banks are distressed. It's when banks are unwilling or unable to lend to each other. They say, hey, no, I don't have the cash, or I don't want to give you the cash because I don't trust that you'll give it back. And so the Fed steps in and says, okay, well, we are the lender of last resort and we will lend it to you. And so this only opens up when banks are not willing to trade with each other or to lend to each other. So when are banks not willing to lend to each other? It's when credit is terrible in the market for whatever reason. And if there's bad credit in the market, then that means if banks aren't even willing to lend to each other, are they going to be willing to lend to corporations? Are they going to be willing to lend to individuals? So then we have the beginning of a credit crunch and a credit crisis. So that's why I'd be concerned if the repo window opens up again. All right. Does that make sense? Are you able to follow? I wish I could show you the graph. Yeah, got it. Okay, yeah, definitely not a good sign. All right. Hi, Kay. Okay, so these trades in insurance worked out really well, and actually, I did a few trades based off of the upcoming Gamma software that I wanted to show you guys. So this thing is really coming together, and I'm very excited about it. Mine loaded up, might need to refresh. Oh, okay. Let's see. Oh, yeah, okay. Oh, yeah, so this is the spike I was talking about. In July of 2025, we got that spike. Do we have, what is the most recent date? Okay, it is up to date. So this spike is concerning. You see how low that is normally? And this is all the way back to 2021. We get a tiny little blip right there. In 2023, this was probably not the greatest news that this happened right here in October of 2024. But what you notice here is that starting in 2024, we started opening up that window a little bit. Not much. It's not these baby little spikes. But then you get this kind of big one right here, and then you get this really big one over here. That's already concerning. Can I scale out of this? Let me see. Yeah, over here. Okay, so if I go to max, okay. So over here, in the grand scheme of things, they didn't even give us data during the crisis. Okay. All right, that's crazy that they're not giving us that data. That would be a really useful comparison, because that was the financial crisis, right? So we did see spikes, huge spikes over here in the financial. I was actually trading this during the financial crisis. My job is short-term money markets. I was trading like, I don't know, $100 billion of this a day. So during this time period right here. So I don't know why they're not giving us that data. But look over here in 2020 COVID, you see how high that got, right? Or right before COVID, look how high it got. And then something like COVID happened, and then it was a really, really bad event. Okay, so if we start to spike up and we have to open it several times, or we get these really high repos. So look at October and November in 2019, what was going on in the markets? Okay, so this was October 2019. I mean, we fell off a little bit, but why not over here, right? This isn't as bad as this. We didn't get the repo stuff right here, and then we got again in November, and the market's just screaming higher. Right? So there is this delayed effect, and yeah, you can argue, well, COVID was this black swan thing, yeah, but you had a black swan thing happen when the system was showing signs of distress. Okay, so if you walk up to a 100% healthy, fit, healthy man and you punch him in the chest, he's going to say, ouch, that hurts, and maybe be out of breath for a little bit. But if you take a stage 4 cancer patient and you punch him in the chest, you might kill him. Okay, so basically, COVID came when we were, maybe not a stage 4 cancer patient, but definitely not a healthy, it wasn't healthy, and we punched him in the chest. So that's what happened with COVID. So what we're saying right now is that, okay, right now we're at all-time highs again, just like we were in 2019. And, on the surface, he looks good, but maybe if we see another spike in this repo, then that's going to be signs that, oh, actually, it's kind of sick. It just hasn't shown up yet. Maybe I have stage 1 cancer or stage 2 cancer, and I'm still walking around and no one knows that I have cancer. I'm hiding it from everyone. And then if we then get punched in the gut or punched in the chest, then that's going to be a lot worse than if I was healthy, fit, teen, 20s male getting hit in the chest. Okay, that's what we're saying right here. Okay, so let's take a look at this gamma tool. And I don't know if the scan still takes a while, so I pre-scanned this and I used a lot of criteria, so we only came up with 20 candidates. I'll show you this in a little bit, but let me show you this one first. And this was a scan that was completed early in the morning. And actually late yesterday. So before the market opened, we saw this scan. And I was looking for opportunities using this. So on the scan, when it came up, I was looking at the volume percent to the gamma exposure. Okay? So basically, I need to validate these calculations. But in any case, whether the percent is accurate or not, the magnitude relative to each other is accurate. So what we're saying that is that KView has a major gamma exposure at 23. And in order to get to 23 from the current price, or at least the price at the time of the scan, it would have to move up 7%. If the market moved up 7%, the market maker would have to purchase 3,355% of the daily volume in order to cover that, which means the market maker is going to be scrambling their butt off in order to cover that. So that's a major, major, major move. And so that's what I'm looking for. So basically, the market maker would be forcing KView to move towards 23. And then 23 is about 3 ATRs away. So I was looking for something more like 1.5 ATRs away, and I found MO. You see, that implications that the market maker would have to move 900%. I'm pretty sure this calculation is wrong. It shouldn't be that high. Okay, that's a really extreme number. But again, relative to each other, I can still count on these numbers. So MO caught my attention, It was 68 was the target at a 1.4 ATR move. 1.4 ATR move, if it's just a normal move, normal average move, it'd probably take 3 to 5 days. So I'm looking at a short-term swing, or maybe a 1-week swing. So what did I do with MO? I went in, and let's see where MO opened today. Let's go over here. Okay, so MO, you can already see that this was a successful trade. MO opened right here at 66.80. So I'm looking for a move to 68. I'm looking for it to happen in 3 to 5 days. What ended up happening is it moved all the way to 67.8 really early on, which is pretty close to 68. So I said, oh my gosh, we're already pretty close in just 20 minutes. I'm going to take profits on it. Okay. But let me show you the setup first. So because of that, because I was thinking that it might be a 1-week trade, I went with a 3-week expiration. Okay. So I went with let me show this to you guys. Okay, so I bought a September 5th expiration. Oh, that's only 2 weeks, right? Week and a half. 2 weeks. 2 weeks expiration. Okay, so I went with 2 weeks expiration because I was expecting it to be a short trade, 1 week max, and I ended up getting that move in a single day. Why? Because that's much faster than I was expecting, or I should say much faster than average. And the reason why is because the market maker represented that they needed to be a significant percentage of the normal daily volume in order to cover their butts. And so the market maker was helping push this towards 68 a lot faster than it might go on its own. And so this was a nice trade from the open in just 20 minutes. I wasn't expecting it to be a day trade, because I was expecting today to be kind of choppy or actually downward movement. So this was a flew in the face of the overall market. It went up instead of down, which is fine. But it just shows you the power of these gamma levels. So that trade ended up being so we got in at $1.58, exited at $2.17. Is that maybe a 30-something percent? 37.3% in just 20 minutes, right? 6:31 to 6:51. So that moved a lot faster than I thought it would. Then the other one I saw was the other one that caught my attention. And I was just quickly looking through these. It's not like I spent a lot of time analyzing, because the software already spit these opportunities out for me. So the other one was Dash. Let's find Dash. Over here, we see it down. Okay, so the major gamma exposure is 3.42% below the previous day's close. And we were expecting it to go, that exposure was at $240. If we look at our open, or at least the day's close, right? Yesterday it closed at 248. We opened at about here, 245-ish. So to go down to 240 is 5 points. And that's pretty good. That's a pretty big move. Again, I wasn't expecting this to happen in a single day. And so I gave myself the same 2-week expiration. But the signs were that the market maker would participate and force the price lower much faster than normal. I already took a long in MO, so I wanted to find a short to balance that out in case I was completely wrong and the market just tanked or flew higher, and at least one would balance out the other. One would be able to take advantage while the other suffered, and at least the two would balance each other out. Just turned out both of them were right. So we made money on both. And you see that this one drove down by, again, 20 minutes in, it was already below that 240 target. Right? So this one moved very, very quickly as well. And this one, the options were a lot more expensive and a little bit more spready. So I did a vertical. Okay, you can see even right now, 30 cents wide there, 25. Okay, so this is much tighter than the open. So at the open, market makers still have really wide bid-ask spreads because it's volatile at the open. So when I went in at the open, the bid-ask spreads were about $1 wide, which was too wide for me to try to just take a straight put. And so I went in and we did the vertical, and we got in at $1.50, exited at $1.95. And again, this was, 20 minutes also, right at the open, 2 seconds after the open. And then 20 minutes later, that was, okay, so 30%. And 30% on a vertical that expires in 2 weeks after just 20 minutes, that is a huge move. So if I had been able to go in on directly on a put, I would have made a way, way, way more money, because when we are far from expiration, the vertical is insensitive to price movements. So if we go over here and we go to option strat, and I build a bull put spread. Oh, it's not a bull put, it should be a bear put spread. On Dash. And then I'll just build one near where it is right now. And we go out to the September 5th expiration. You see how the curve is kind of flat versus if look how flat that is right now. Versus as time goes by, it gets steeper and steeper. See that? It got steeper and steeper. So right now, at the beginning, it's very flat, which means it takes a huge move in order just to gain a little bit of percentage. So this 244, if it goes down to 240, it still only makes 15%. And that's that $5 move. Well, how much does it take to go down to get 30%? Which is what we got. That's a $9 move, no, $8.50 move in order to get that. Okay, so that's a really, really big movement because we're so far away from expiration. So that move happened really fast. If it had been a normal put, then that performance would have been even better. So we're finding some really good opportunities with that scanner so far. I'm very, very, very pleased with it. I did one more, which I will share with you guys. Is it here? No, this is the new scan. What happened to that scan? Okay, is LHX here? I did one more. Did it on LHX. And I did it later in the day. In any case, I'll just show you the trade. And I'll tell you why. Okay, so I did it 11:19, so an hour, 2 hours, an hour and a half before the market closed. I went into LHX. And if I look at the gamma picture of LHX, it swears here. Whoops. I'm losing way too many windows open. Okay, if we look at LHX, about an hour and a half before the market closed, okay, started to show some strength right here, a relative strength to market. Go about 11:15 right here. So when we broke above this deviation in the VWAP is basically when I entered. Okay. But what's interesting about LHX is what do? We never start with a scan and just trade. The reason why all of the insurance trades that we looked at yesterday worked out is because we looked at the greater context of the market and the sector first. So if I look at LHX, what do we see here? It's what I talk about all the time in this show, which is we have a longer term trend, and then we have a shorter term trend that goes against the longer term trend and then just begins to revert and match the longer term trend. Okay, so that's what we got today. And then when I looked at the gamma picture, let's see if I can pull it up. I thought I had it open already. I have too many windows open. Oh wow, that loaded really quickly. Nice. Okay, what we see here is that I've got significant gamma at 270, significant gamma, the biggest gamma, at 280. I got pretty big gamma at 290, and I got big, very significant gamma at 300. Might be a little easier to see right here, okay? So what that tells me is that this area between 270 and 280, it might be hard to break out of. But if it does break out, then it can hit 300. And because it's hard to break out of, I have a support at 270. And then I can target, at the very least, I can target 280. And so that's what I was looking at when I went into this particular trade. Okay, and we got in at over here around 11:19. 1919. Okay. So right about 274 and a half. Okay, roughly 274 and a half. Went up to 276 and change by the close. And I plan to swing this to close to 280. It doesn't have to hit exactly 280. I know it's going to be a little difficult, excuse me, for us to get above 280. So I'm not going to be too nitpicky, right? If we get to 279, 279 and a half, I'll be happy and I'll take my profits. Just like with MO, right? To MO, yet the gamma pocket was at 68, but I didn't split hairs here. We got to 267.8. We got within 20 cents of it. It was super fast. So I went ahead and took my profits. And yeah, there was a little bit higher point during the day, but it pulled back before that, right? So basically, I got maximum utility of my investment, of my money, right in these first 20 minutes. And it would have been a long slog in terms of a day trade to get it all the way over here. And then we never quite hit 68. Maybe we'll hit it tomorrow, but then I've suffered even more time decay by tomorrow. So this was actually much more efficient. So I'm not going to hold the gamma level to be super exact, right? I don't have to hit 68. So if it hits pretty close to it, I'm going to go ahead and take my profits. And a lot of times it swings right through that gamma pocket. If there's a lot of momentum and the market maker is covering like crazy all the way to 68, but then the market sees this huge run upwards and then people pile in, then we'll blow right through that gamma pocket. And we see that happen a lot also But you know what? Let them make their money, or if it's going to keep on running, I made my money already over here. I'm not going to chase it at that point in time. Okay, so that's the plan. My plan for LHX is, hey, we're over here at 76. I got in at 274 and a half roughly. Now, if we go up to 278, I might even be happy with it, or 279. I don't have to go all the way to 280. All right. So the scan is doing very well for us. So I ran this one, and I wanted to see. I put in a lot of special criteria in it to narrow down the possibilities. It came up with 20 of them. So I want to take a look and see if anything pops out at me. Okay, so again, I'm going to look for a pretty quick trade. I want an ATR multiple of maybe somewhere between 1 and 2. Anything less than that is probably not, I'm not going to get paid very much for it. If I stick to 1 to 2, then I'm probably looking at, if it was an average trade, then it would be a 1 to 2 week trade. But if the market maker participates, then it could just be a 20-minute trade like happened today, or it could end up being a 2 or 3 day trade. So first thing that's jumping out right now at me is UNH. Okay, so UNH, why? Remember, we always have to start with the trade idea. I'm not just looking at a scan and choosing to go into it. What I want to do is have my trade idea and then my timing. And then I can do my execution. No, actually, let me answer your questions first. On your Fred graph, what were the parameters? There were no parameters. It was just I just opened up the Fred graph. So basically, I ran this. I just clicked on it. That was it. I didn't run anything. Yeah. Okay. Do you put a limit on or on these options since the pricing options is uncertain at the open? Yes. 100% of the time, I trade with limit orders when I'm trading options. 100% of the time, because the bid-ask spread, the options are not liquid enough for you to use market orders. So 100% of the time, you use limit orders, even on the exit. If one of your programs you gave 4 underlying assumptions, one was S&P continues up, another was population will increase, given restrictive immigration policies and deportations, do the assumptions hold? Yeah, because we have a positive birth rate in this country. Yeah. So yes. Is this part of the Gamma Pockets program? No, this is software that will help the Gamma Pockets program for sure, but also it's separate. It's going to be separate software. No. On Dash, can you show the software was showing the downward direction gamma for Dash? Yeah, I can do that. Let me see. Let's find Dash. Hopefully that loads quickly again. And then mine did not look like that. You may have to zoom in or out. How are your other paid programs in comparison to Gamma Pockets? All of my programs perform fairly similarly. Actually, they have a very similar win rate. They have a very similar profit factor. They perform very similarly, even though they take advantage of completely different edges in the market. But they're all roughly similar. Yeah. Okay, so Dash, we can see this right here. Okay, so you can see that large gamma pocket right there at 240. Okay, which would have acted as support. Get a little bit cleaner picture right there. Yeah, huge at 240. It probably means it's, so right now, where did we close? We closed at 243, really? Is that right? Dash. Yeah, we closed at a huge recovery. Okay, so it went way down and it recovered. So that's pretty positive for Dash. And then, so this is acting as, even though it traded right through it and came back, what was the low today? The low is 233.11. So low over here. Yeah. So this now is support. Okay. So this does not represent the same opportunity as this morning because that move from 243 back to 240 is not, let's see, our ATR now is now 8.91. So it's a fraction of the ATR. It's like 1/3 of an ATR. So that's not, you're not going to get paid for that. Okay? So the opportunity in Dash is already gone because we went from yesterday's close was 248. Right? So we're up here. And then, well, we were up here and then fell all the way down here. And then we were past target when I took my profit and then it recovered. Okay. So, that in this particular one, it bounced and recovered. It didn't follow through and keep on going because the overall market came back. Okay. So the other thing was, why was I okay taking Dash to the short side? Because market overall, I said, was choppy to maybe mildly bullish. Why was it okay for me to take a put? Two reasons. One, I already took a long in Altria and I wanted something to balance it out because I knew there would be a lot of volatility today. We have the FOMC minutes coming out and I needed something to balance out because just being completely exposed on MO for me is too much risk. Or what if I'm wrong and it tanked? So I wanted something to counterbalance it. So that's one reason why it was okay to go counter the market today on Dash, and only because I had a long already in place. And number two, or at the same time, I put in those orders at the same time. And then number two, because I was playing this move down to the MA50. I'm not expecting, this was never designed to be a trade that would move because where's the MA50? It's at yesterday's MA50 was at 240.73. My gamma pocket's at 240. Okay. So they're basically the same level. So I'm just saying, hey, I'll play this down into strong support and then I'll take my profit, which is basically, I took it a little below that, but because in the few minutes that it took me to notice it, we were already below it. So that is why it was okay for me to go short. So even if this was true, say, hey, I'm just going to play this down to the MA50 into strong support, I would never have done it if the first condition wasn't in place, which is that I had a long balancing it out. And I wanted this to balance out the long. Okay. So again, we need to take in the context of the market. We need to take in the context of the sector. And in this case today, what I was exhibiting was something a little bit even more advanced, which is taking it in the context of my portfolio as well. So otherwise I would never have taken Dash short. Good observation or good stimulation point. I don't know. I forgot what you asked exactly. That caused me to go into that detail. Will this software be rolled out as a new program? It will be rolled out as new software. Yes. I don't know, but new program. It'll be new software that's available as a tool for people who decide they like it and want to use it. Yeah, it'll be available. Okay, so what was I going to look at? We were looking at UNH. Why is UNH interesting? Not because, so UNH long, normally you would not want to take this long. It's terrible. But we start with the trade idea. And the first trade idea is that UNH has been demolished by this market. It had the April, I think right here was when the CEO was attacked and murdered, unfortunately. Had a bit of a recovery, but then after the tariff liberation day, it just went down and never went back up. It just kept on going down. Then we had this second healthcare tariff scare that caused it to go down. And basically, this thing has gotten so destroyed. Right? Down 62% from the December high. Okay, 62%. That is a huge, huge, huge devaluation. But nothing fundamentally changed in their business. This is all outside circumstance. And then we had news. This pop up right here, this gap up right here was news that Warren Buffett bought into UNH. And so we got that gap up, and then we were getting this baby pullback very close to the MA50. And now my Gamma software is telling me, hey, we've got a Gamma pocket right here at 310. So now this is becoming very interesting to me because now I have a real trade idea. It's not, oh, there's a Gamma pocket. It's sort of like saying, oh, the MA50 is sloping upwards. Okay. All right. That by itself doesn't make it interesting. It's in the context of everything else. So this trade idea is not based on the market. It's not based on the S&P 500, unlike most other trade ideas. This trade idea is based on that it's been so beat up that it has become such a good value that Warren Buffett was interested in it. Okay, so I'm letting him do all of the valuation. And if Warren Buffett is the ultimate value investor, and if he thinks it's a good value right now, then it's probably a good value right now. I probably don't have to do a whole bunch of research on top of it to determine whether or not it's a good value. If he thinks so, I'm probably going to listen to the master and say, okay, it's at a good value right now. Even at this gap up from 271 to 300, that's a pretty big gap up. That's a 11%, 12% gap up. Yeah, 12% gap up. Doesn't matter. There's a lot more room for this to go. It could go all the way up to the MA200. But my Gamma pocket is saying 310. 310 is just right there. It's basically not even the high of a couple days ago. But that is a 10-point move, which is not bad at all. And it's about roughly 1 ATR, a little less than 1 ATR. But if I can get a 10-point move on UNH, if it can happen in a day or 2 days or 3 days, then we've got an interesting potential trade right here. Okay, so I guess I'm going to have to wrap it up after this one, but let's look for a fun little potential trade on UNH. Hopefully their options are not super expensive. Oh gosh, close that. I need to close a bunch of windows. Okay, so I'm only interested in this to the end of next week maximum. So I need to decide, do I want to hold to expiration, or do I just want to take a quick gain? And so I give myself a couple weeks of expiration on top of that. So I could do September 5th like I did this morning again, or I could go out to September 12th. These options are not super cheap. So maybe I'll try debit spread. It's tight. It's nice and tight. If it's nice and tight, So now if I'm thinking, so right now we have our trade idea, we have our timing. Our timing was determined by our Gamma pocket and by the technicals that we have pulled back fairly close to the MA50. If I wanted to be super tight on my timing, I would wait. I would wait for this to pull all the way back to the MA50, or maybe that EMA 8, since that EMA 8 is crossing, looks like it's about to cross that MA50, then maybe I'll only, by the time the price touches, it'll touch the EMA 8 before it touches the MA50. So I would, okay, let's be super tight and precise about everything. I don't want to teach you guys to jump ahead, okay? So what I'm going to do is I'm going to set an alert for UNH crossing back above the EMA 8, which means that it's going to cross down below the EMA 8 and then bounce back upwards. And then I'm going to, well, at that point in time, then I would choose my execution. So I can't choose my execution right now because I'm not going straight into this. So over here, I would add an alert on UNH when it crosses up above the EMA 8. Okay. And then that would be my very precise timing on when to, if I want a super precise timing, then when I get that alert, then I would look at the intraday, the 5-minute chart, and see where it is relative to VWAP and all that stuff. But we're honing in on our timing, because this could drop down a couple more dollars to actually maybe even $5 to $8, and then we could target that 310. And then that would be a much juicier trade, actually. So I'm going to do that. That's going to be my plan. I already set the alert, and so I'm going to count on this to well, what if it doesn't? What if it just goes to 310? All right, then I missed the opportunity. I can look at other opportunities on my scan. Right? So I'd rather have that precise entry rather than just like, oh, just jump in and see if it goes to 310. Right? Okay. So hopefully that was an interesting view of the software and how it comes up with opportunities and the power of having that information at your disposal. He always, yeah, Buffett always buys value. That's right. Hey, all right, guys. Hope you guys are learning a lot and getting as excited as I am about the software. I mean, 2 closed out wins and 1 so far nice win on LHX. Let's see what the current LHX I got in at 388. And that bid ask is a little too wide. What was the last trade? The last trade was at $4.30. Okay, so that last trade is far better than the mark when you have a large bid ask spread. Okay, so last trade was at $4.30. So in the last hour and a half, let's call it, from $4.03 divided by 388, okay, up 10.8%. It's not bad. So we're getting some really good opportunities off the software. All right, guys. Yeah, I'll in the coming days I'll show you guys how, once I have the scan, how I'm picking. But I mean today UNH was just because, hey, there's an automatic trade idea here because Warren Buffett just bought into it. So basically I will be looking for things where I can form a solid trade idea behind it. If I heard you correctly, you're going to be using the software to help gamma, yeah, and then you'll also be selling it separately, but not correct. The software is not part of Gamma Pockets. Right? So Gamma Pockets was based off of my own personal software that was only available to me, and now through a huge amount of time and money investment, I'm creating this software right here that I've been showing you to make it available to anyone who wants to become a member of that software. I cannot include it in Gamma Pockets. It's just way too much time, way too much development. Like when it's me and it's just my time and I'm programming something for myself, then yeah, I wouldn't mind sharing that with you guys. I just can't build anything that robust. But the amount of data that we have to pull in, like these scans you saw we've been doing a lot to optimize and make it run faster. But you saw those scans run for over an hour. It's scraping a lot of data, and that data is not cheap. And when you are doing it for multiple users, if you're just using it for your personal use, it's affordable. But when you have multiple users, it is like tens and tens of thousands of dollars. And then you've got to pay the developers, and then you've got to pay them to maintain and upkeep. And if something goes wrong, and fix bugs and support and all of this. So there's no way that we could offer the software that I was just showing you for as part of an existing program. There's way too much cost that goes with it, not only to develop it, but to maintain it and keep it running. So there unfortunately, if I could give it to you for as part of the program, I would, but economically, it would bankrupt me. It would bankrupt me. It would probably bankrupt the publisher too. Okay, guys. That's it for today. Hope you guys are excited. Hope you guys are doing well in the markets. Don't get freaked out by these little, right? Take the whole context of the market, right? This is just chop sideways. This is not bearishness. Okay, so we might see bearishness develop with Jackson Hole, but so far we don't have that concern. All right, have a wonderful rest of your day, and I will see you guys tomorrow.